Hello, everybody. Good morning, good afternoon, good evening, wherever you're tuning in. You're welcome to this week's FX Outlook with Great White FX for the 25th to 29th of March 2024. And as always, we're going to start off with our economic calendar. Looking at our economic calendar, Monday might be a little bit calm. We have one high impact news on Monday for the dollar at 3 p.m. Aussie on Wednesday, but I think the major news is on Thursday and Friday, where we have final GDP on the dollar, unemployment claims, pending home sales, and core PCE price index and the Fed chairman speaking. So that's out of the way. Let's look into our pairs and what we are expecting next week. As always, we're going to start off with the US 100, the dollar index, the Euro USD, the GBP USD, that's the pound USD, gold, Euro pound, pound yen, and Euro yen. So starting off with looking at this on the weekly, this is taking a bullish shape. It's a variation of this formation here. This formation has two candles, while this has only one. So it's like what I'll call a sandwich or three candle pattern. So most likely going into the new week, this pair might still move higher, but we might see a bit of a retracement. We have this imbalance here. That's this daily fair value gap, which price may retrace a bit into. Given the weak formation on the daily. That's a rejection from the highs. You see price includes above this high. So we might see a bit of a retracement before a continuation. So if we go to the 4-hour time frame, we can see the 4-hour time frame is setting up. So we might see a move lower, then a continuation to the upside on the US 100. The next pair we're going to be looking at is the dollar index. Looking at the dollar index, for now, this pair is obviously very, very bullish. As you can see, if you check our review for last week, I pointed it out that this pair is going to be bullish going into this new week. As you can see, we have a massive close after this retracement. So we might be looking at the continuation, because if you look at this, we have a change here. We have a retracement, a very deep retracement. We have an expansion. We have a retracement again, and then price is expanding to the upside. So looking at this on the daily, the possibility exists that we might see one more push to this upside. But first, you might see a bit of a retracement. You might see a bit of a retracement and then a continuation to the upside on the dollar index. But for now, the dollar index is clearly bullish. And if we have a bullish dollar index, that means most likely we're going to have a bearish Euro USD. But if you look at the Euro USD on the weekly, you can see we have a very strong bearish candle with a long wick rejection and price closing near its lows. So this in and of itself is very bearish. If we go into the daily time frame, well, the deal here is that we have this series of other blocks that price seems to be respecting. So going into this new week, we might see a bit of a retracement. That's a reaction from this bullish order block into this fair value gap. So if we go to the 4-hour time frame, we'll be expecting a retracement here. I wouldn't want to see price drop to sweep this lows first. I would want to see the retracement, then a move back down. That's it for that pair. The next pair we're going to be looking at is GBPUSD. The GBPUSD starting off from the weekly, you can see is bearish. It's very, very bearish. This bullish order block has been taken out by price on the weekly. If we drop down to the daily, you can see that price didn't close below this low. So we can see we have something that looks like a small order block here, but price closed it. So we might be looking at this one slightly down here. But if you notice, price didn't close below 2601. a close back inside, which points to the fact that going into this new week, we might see a bit of a steep retracement for either of these 4-hour fair value gaps or probably the daily fair value gap. If it gets very strong, then we might see it come into any of these areas before a continuation back to the downside, heading for these lows here. So that's it for the British pound. Before we go any further, I would like to introduce our sponsor for today. Sponsor for today is Trading Pro, prolific, proficient, professional. So we have an Trading Pro is making a very wonderful opportunity available to everybody. So with a minimum deposit of $50 to $100, you get live access to my trade ideas, my trade outlooks, and my trainings every Mondays and Tuesdays. So with a minimum deposit of $50 to $100, you don't get to pay any monthly subscription. You just sign up and get access to my trades outlooks every day, my live trading room, and my trade ideas for the week. So it's a beautiful opportunity, and the link to sign up is in the bio. That's if you check, go down, you see the link, and then you can click on it and sign up. So let's continue. So the next pair we're going to be looking at is gold. Looking at gold, let's go to the weekly. Gold has a long upper wick on the weekly. That's not good. That's a massive rejection, which points to the fact that we might see weaker prices coming in, as you can see, but price is within this daily order blockade. So the possibility exists that we might see a bit of a retracement, probably here, before a continuation back to the downside. But for gold, once you get a close below 1.21, this low here, as you get something like this, then you know that price is going to continue moving down. So for gold, I prefer to see a bit of a retracement than a continuation to the downside. The next pair we're going to be looking at is Euro Pound. Euro Pound started off the week looking promising, but it has closed back below. It closed back below 85.78. That's not a good sign. And if you look at it on the daily time frame, you can see it has a long wick. Although the body seems to be a body close above this high on the daily time frame, but the weekly is not showing it. If we look at the 4-hour, we have a lot of rejection. So this may retrace a bit. We might see a steep retracement before a continuation to the upside. That is, as long as price stays above 0.8530. Then the next we're going to be looking at is pound yen. Looking at pound yen, we're starting off from the weekly, the same thing too, a long rejection from the weekly, long wick rejection from the weekly. If we look at it on the daily for Friday gave what you call a textbook railway track. Do you see this? This is what you call textbook railway track. And after that, what happened? Price dropped. So if we look at where price is coming in, price is coming into this range. So we might see a bit of a retracement before a continuation to the upside. So we might see a retracement on this pair, probably into this other block. We'll be watching this other block for an opportunity for a short, and then a move into this area here. So for GBP yen, we might see weakness coming into the new week. Then last but not the least is Euro yen. Looking at Euro yen, the same thing too. The interesting thing about the Euro yen is that it closed below two significant levels. It didn't sustain a close here, it didn't sustain a close here, and it has a long upper wick. If we go to the daily time frame, we can see that price is retracing into this broken range between here and here. That's where we have price retracing into. So, and we already have a bearish formation, seems to be setting up on the daily. If we look at it on the 4-hour, we'll be waiting for a bit of a retracement, probably into this structure point. into this structure point, and they move lower to bring price into this 4-hour fair value gap. So that settles it for today. Any questions? Do I have any questions?
Yeah. Good evening, Great White.
Good evening, ma.
Gold.
Yes.
I wasn't about the level you said that if it breaks that level, that means it will go down more.
2140. Just mark 2140 on your chart. 2140.
Likely to have a retracement first before
Yes.
going down.
If it breaks below it, you wait for the retracement and then you move lower.
Thank you.
Okay. So the absence of any further